Welcome back to MarketSnap, your daily market rundown. Microsoft just flipped the AI trade on its head. After a brutal sell-off that had everyone questioning the entire AI narrative, one earnings report from the software giant sparked a massive relief rally, sending the Nasdaq surging nearly 3%. But the question on every long-term investor's mind is, was this a dead cat bounce, or is the bottom finally in for the AI trade? Let's get right to the scoreboard. The S&P 500 jumped 1.66%, closing at 7,437. The tech-heavy Nasdaq was the star of the show, rocketing 2.78% to 25,122, recovering a chunk of its recent losses. The Dow Jones Industrial Average also had a solid session, adding 1.9% to finish at 52,208. The Russell 2000, representing small caps, climbed 1.3% to 2,946. And the VIX, the market's fear gauge, tumbled over 17% back down to 17, signaling a significant drop in anxiety after yesterday's Fed-fueled chaos. The big story today was the massive rotation back into semiconductors and tech. This was a classic buy-the-dip session, and it was led by the names that got hit the hardest. Microsoft surged over 15% after its earnings, single-handedly dragging the entire market higher. Micron and Lam Research both jumped around 18% on strong results and AI demand commentary. AMD, Applied Materials, and Marvell all saw double-digit gains. Even SanDisk, the flash memory giant, soared 26%. This was a broad-based tech rally of epic proportions, but not everyone got to party. Meta Platforms was the ugly duckling, dropping nearly 8% after its earnings miss and light guidance. The market is clearly worried about its massive AI spending without a clear near-term payoff. Other notable laggards included Shopify, ServiceNow, and Accenture, which all fell between 4% and 6%. It was a clear sign that while the AI infrastructure trade is back in vogue, the software and ad-dependent names are still under pressure. The macro backdrop is still a mess. We got the Fed's preferred inflation gauge, the PCE, which showed prices cooling in June, largely due to a temporary drop in gas prices. But the core rate is still at 3.3%, well above the Fed's 2% target. GDP growth slowed to a tepid 1.5% in the second quarter. This stagflationary vibe is what's keeping the bond market on edge. The 30-year Treasury yield hit a 19-year high, touching 5.2%, as the so-called bond vigilantes are punishing the Fed for not being more aggressive. Chairman Warsh's credibility is being questioned after a divided 9-3 vote to hold rates steady, with 3 members dissenting in favor of a hike. The market is now pricing in a higher chance of a September rate increase. Adding to the complexity, the geopolitical landscape is heating up. Oil prices are climbing again as the conflict in the Middle East escalates, with Brent crude pushing above $92 a barrel. Drone attacks on Russian refineries and a major oil export terminal in the Black Sea are tightening global diesel supplies. This is a real wild card for inflation, and something long-term investors need to keep a close eye on. It was a massive earnings day. Beyond the tech titans, we saw strong reports from O'Reilly Automotive, which is aggressively buying back shares, and Bristol-Myers Squibb, which raised its full-year guidance. MasterCard beat estimates on solid cross-border volume growth. On the flip side, Teladoc and Alnylam Pharmaceuticals were big losers after disappointing the street. You can find exclusive earnings transcript summaries on MarketSnap. Looking at the sector action over the past week, the rotation is clear. Consumer defensive and communication services have been the top performers, up over 4% each. This is a defensive tilt. Meanwhile, technology is flat to slightly negative on the week, and the big laggards are industrials, basic materials, and energy, which are all down over 3%. The market is clearly rotating away from the hot AI momentum plays and into safer, more value-oriented areas. Zooming out to the weekly winners, Workday, Thomson Reuters, and Garmin have all surged over 20%. These are high-quality, cash flow generative businesses that are benefiting from the rotation away from pure AI hype. The weekly losers list is a graveyard of AI infrastructure plays. Nebius Group, Coherent, and Vertiv are all down over 25% in the last 5 days. This is the violent unwind of the AI trade we've been talking about. For a long-term investor, this is where you need to separate the signal from the noise. Are these companies' long-term theses broken, or is this just a painful but necessary reset in valuations? One interesting data point: corporate insiders haven't been this bearish in over 20 years. They are selling their own stock at a record pace. That's a warning signal you can't ignore. Also, retail investors are dumping stocks at the fastest pace since the COVID crash. When the little guy is panicking, it often marks a bottom. But with insiders selling, it's a confusing signal. The best course of action for a long-term investor is to stay disciplined, keep your shopping list ready, and wait for the dust to settle. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. It was a wild day of rotation and relief, but the macro headwinds are still very real. Make sure to check out our detailed SWOT analyses on the stocks moving the market to help you build your long-term wealth. We'll see you back here tomorrow.